Hello everyone, and welcome back to the channel. In the last video, I officially introduced the newest member of my trading system, the QQQ Mean Reversion strategy, which acts as my system's defensive shield. Today, I don't want to talk about the strategy itself, but rather a story that happened before the official announcement. Why didn't I tell you about this strategy the moment I developed it? Because in the world of trading, any unverified idea can be a trap. Before I could formally integrate it into my system and present it to you, I had to put it through a critical test, a completely confidential parallel live test that ran for over 10 days. Part 1. Why conduct a silent period test? As a systematic trader, my biggest fear isn't taking a loss, it's the unexpected, when a strategy's real-world performance is completely different from what I saw in backtesting. Therefore, this 10-plus day silent test was my litmus test. Its purpose wasn't to see how much money it could make, but to answer a few more fundamental and crucial questions. Is it disciplined? Will it trade erratically when it shouldn't? Are its stop-loss and take-profit logic executed correctly under real market quotes and slippage? Is it truly complementary? This is the most critical point. Will it automatically step up to work when my SOXL momentum strategy is slacking off or taking a hit? If both strategies are trading at the same time, then it serves no purpose. 3. What is its personality? Is it a quiet strategy that trades only once every few days? Or is it more active, with signals appearing daily? I had to understand its personality before I could confidently introduce it to all of you. Part 2. 10-plus day parallel test. Full data transparency. So what did I observe during this secret 10-plus day run? Let's look directly at the raw, unfiltered data. During this period, my QQQ Mean Reversion strategy, trading 3 shares per transaction, automatically executed a total of 7 trades. Trade 1, July 7th, July 8th. Buy price 553.61. Sell price 553.41. A rough start with a loss of $60, minus 0.04%. Trade 2, July 9th, July 10th. Buy price 554.955. Sell price 556.80. A quick turnaround with a profit of 578, 0.35%. Trade 3, July 10th. Buy price 553.2393, sell price 555.225. A nice intraday trade, profiting 5.96 plus 0.36%. Trade 4, July 14th. Buy price 553.98, sell price 553.76. A tiny stop loss for a loss of 0.66 minus 0.04%. Risk management performed perfectly. Trade 5. July 14th, July 15th. The highlight. Buy price $556 for $188. Sell price $560.21. Held overnight for a precise take profit, yielding a profit of $11.37, plus 0.68%. Trade 6, July 15th, July 16th. Buy price $558.7493. Sell price $557.13. The largest loss of the test, at 486 minus 0.29%, once again validating the effectiveness of the risk controls. Trade 7, July 16th. Buy price, $553.849. Sell price, $556.92. The final trade of the test, with a profit of $9.43. 7%. In the end, these 7 trades resulted in 4 wins and 3 losses, for a win rate of 57%. After offsetting all losses, the 10-plus day test yielded a final net profit of plus $26.42. The cumulative return was plus 160%. Part 3. The ultimate question. Are they complementary under equal risk exposure? This is the core purpose of the test and the most exciting part. Let's look directly at what happened on July 16th, when both strategies were active. SOXL momentum strategy, the spear of offense. Shortly after the market opened that day, at 9:37:01 a.m., my system deployed approximately 10,322s to execute a trade. However, market momentum failed to continue and quickly reversed. causing the strategy to strictly execute its stop loss just over 4 minutes later at 9:41:58 a.m. for a final loss of $82.92. Here's a critical detail. Because SOXL is a 3x leveraged ETF, holding $10,320 of SOXL is equivalent to a buying power of roughly $30,966 in a standard 1x ETF like QQQ. So, our spear of offense was wounded in this operation, which had about 30K of risk exposure. QQQ Mean Reversion strategy, the shield of defense. What did it do on the same day? After the SOXL strategy was stopped out, the market continued to dip. At 11:20:46 a.m., during peak market panic, it captured an oversold opportunity at a lower price of $553.49, deploying about $1,662 of test capital. It ultimately sold during the afternoon rally at 2:45 p.m. for a price of $556.992, locking in a profit of $9.43. Now for the most hardcore question. What would have happened if we had deployed the same buying power, approximately $30,966, that the SOXL strategy used to execute this QQQ trade? Based on the calculation, the same trade would have generated a profit of about $175.69. What does this mean? It means that on July 16th, when viewed from a perspective of completely equal risk, i.e., buying power, the spear of offense lost $82.92, while the shield of defense not only didn't lose, but it profited $175.69. The latter's profit not only completely covered the former's loss, but would have resulted in a net positive gain for the entire system that day. This is the most perfect form of complementarity. The value of a strategy portfolio isn't that it never loses money. It's that when one strategy gets wounded, because it's unsuited for the current market conditions, the other strategy can immediately step up, not just to defend the position, but to launch a successful counterattack. This real-life case study, based on an equal buying power comparison, gives me full confidence to formally integrate it into my system. Part 4. Why this process matters. The reason I wanted to share this behind-the-scenes story is to convey my core philosophy as a trading system developer. Always respect the market and always let the data speak. Any strategy, no matter how beautiful the backtest data, is a brand new entity the moment it goes live. This 10+ day parallel test was my duty to the market, to my system, and to every single one of you who follows this channel. It ensures that I am not promoting an unproven idea, but rather sharing a tool that has already passed its initial test and proven its worth. So, the QQQ Mean Reversion series you see now has already passed this 10+ day real data gauntlet. I hope this behind-the-scenes story has been insightful for you. A successful trading system isn't built on one or two genius strategies, but on the tedious process of continuous testing, observation, and revision. If you agree with this rigorous and transparent approach to trading and want to continue witnessing how my all-weather system is built and refined step by step, please be sure to subscribe to my channel. Your likes and shares are the biggest motivation for me to continue sharing these real insights. See you in the next video.